Hey guys, this is Justin from nextbigtrade.com. In this video, I want to dig a little bit deeper into stage analysis. I want to talk about the stage analysis screener and how it relates to Stan Weinstein's forest to the trees approach. I consider the forest to the trees approach really the essence of stage analysis. And I think this strategy can help anyone that doesn't have a strategy for trading the markets or that's getting into stage analysis and wants to really get a hold of how the system works. So on page 75 of Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets, he outlines the forest to the trees approach. And this strategy really has three components to it. The first and most important component is the overall trend of the market, which I consider to be the S&P 500. And what the trend of the overall market has a big impact on how individual stocks trade and how sectors of the market trade. When the overall market is negative, most stock market sectors and stocks tend to either be trending sideways or down in stage 4 bear markets. And vice versa, when the market is bullish in a stage 2 uptrend, you'll find sectors that are moving higher in bull markets, and you'll find stocks that are exploding higher. So really, the idea of the approach is that first you determine what the trend is of the overall market. And Stan Weinstein says if it's negative, you want to do very little of any buying. Even if you see some stocks breaking out, your probabilities of success are quite low when the market trend is going against you. And in the bottom here, he says, if you follow this three-step process, you will find yourself heavily invested in the best acting stocks when the market is powering ahead and sitting on large cash reserves when the overall trend turns bearish. I think this is really the key right here. And this is, the way I like to trade the markets is I want to be heavily exposed to the market in the best acting stocks in the leading sectors when the market is bullish in a stage 2 uptrend. And when the market is not in stage 2, I want to be sitting either 100% in cash or a vast majority of my account in cash and waiting for the market to turn bullish again. So that's really the two modes that I want to be in when I'm trading the market. And just to go back to the stage analysis visual example, for those not familiar with stage analysis, when the market is in an uptrend in stage 2, the S&P 500, we want to find stocks breaking out on volume into stage 2, and hopefully, out of a stage 1 base, the earliest possible base, breaking out, moving higher, and we want to find the best stocks in the best sectors to trade. That's really where we want to focus our attention. If you have watched any of my recent videos, we talked about the cannabis sector a lot a couple months ago. I traded that sector heavily, and it's really where I've gotten most of my profits for the year from that sector. But now that sector has turned bearish, as we'll talk about briefly here in a second. But first I want to talk about the stage analysis screener for a second. So basically, what the stage analysis screener is a piece of software that I've written that attempts to gather a lot of information related to stage analysis and present it on my website at nextbigtrade.com. You can go to the screener at screener.nextbigtrade.com. But what I want to talk about here is actually a chart I've created with the stage analysis software that I've written. And what this is a back test of the SPY ETF going back to 1990, and it's color coding the graph, which is the price of SPY, with what the stage analysis screener would calculate for the stage. So what I'm showing here is if it's green, the stage analysis screener would be in stage 2, and if it's gray, the screener would be in stage 1, 3, or 4. And what I'm trying to show here is basically that when the market is in stage 2, obviously, it's moving higher, and this is where the bull markets are. So you'll see that the two big bear markets that you probably should be familiar with if you've been trading the market for a while. We had a big bear market in the year 2000 going into 2002, and then we had the financial, meltdown panic in 2008, and which was a monster bear market. And then we've been in a bull market for the most part ever since. So just visually, you can see that the stage analysis system would keep you out of the market for both of these big bear markets. But even if we're not in a bear market, we tend to get these periods pretty much every year where the market is unhealthy for at least a couple weeks to maybe a couple months or longer. And that's another time that you don't want to be heavily exposed to the market because a lot of individual stocks can take considerable damage even when the S&P 500 is taking like a 10 or 20% loss. So for example, the energy stocks were a recent example in 2014 where these stocks got absolutely obliterated when the price of oil collapsed. A lot of these stocks lost 50 to 70% of their value, but the S&P 500 only went down like 10 to 15%. So when the market is unhealthy, you can still, take big losses in the market, and that's why Stan Weinstein says that unless the market's in stage 2, you want to be, pretty much in cash and waiting for the market to get healthy again. So right now, the market is gray here. The market's actually in stage 3 according to the screener, and we're just waiting on either, the resolution into stage 2, or maybe we're going to get a bigger bear market. And you'll notice that most of the time, these stage 3s tend to move back into stage 2 because we're in a longer term bear market. But occasionally we get these big stage 4 bear markets. So again, stage analysis keeps you out of these massacres, which is originally why I was attracted to the system, because I wanted to find something that would have kept me out of the 2008 meltdown. And the thing is you'll never know when a negative period for the market will turn into a meltdown. So you might say that you're just being overly cautious, but the thing is that you're not going to make a lot of ground up when the market is negative anyway, because most stocks are acting poorly. So let's look at that right now for a second. So for every stock like MongoDB that's acting pretty well right now, even though the market's pretty bearish, this stock has a nice consolidation here and could be breaking out into new highs at any point. And also Goose Canada Holdings, another stock that just broke out on big volume out of this base, kind of a stage 2 continuation. And one of the only stocks that I've seen recently that's actually breaking out on volume to new highs. For every stocks like these right now, there's stocks like Nordstrom, which just recently reported earnings and got obliterated. It formerly had a pretty good, price chart. It was breaking out of a big multi-year base, had some nice volume. Actually, a stock that I recently owned, but sold out of, as it started acting negatively here. And a stock like Nvidia, which was a former monster winner, long-term stage 2 uptrend here, and all of a sudden just completely starts melting down, is down like 30 or 40% here in a period of a multiple weeks. And this stock's in stage 4 now. So, and then you have something like the cannabis sector where we had this huge stage 2 continuation breakout back in August, that we traded heavily for a few months here, and then all of a sudden it started stalling out. We get this big reversal candle back in October, and then all of a sudden now these stocks are under significant pressure and they're trying to hold on to the 30-week moving average, but they're still very volatile right now, and definitely in a stage 3, and we're trying to figure out what's going to happen. If this sector, a lot of these stocks actually have already broken down below the 30-week moving average. So this cannabis sector is no longer a stage 2 sector, really. So now turning back to the stage analysis screener, so wrapping this back up into Stan Weinstein's Forest to the Trees approach. Really, the message of this video is that when the trend of the market is not in stage 2, you really don't want to be doing anything in the market if you're following the stage analysis system. You really want to be basically building a watch list, studying past market history, and kind of just paying attention to the market. But there's really nothing to do in stage analysis because we're waiting for a better market. And all you're going to do, I've lost money recently a little bit taking some stupid trades, and even I'm not perfect, but I'm just trying to use a system and get more experience under my belt as these years go on. But there's just no point in being in the market when the market's not in stage 2. And again, Stan says that down here, you want to be heavily invested and be in these big winning stocks when the market is acting really well, and you want to be sitting in cash and doing really nothing except for watching the market when the market's not in stage 2. So looking at the stage analysis screener, so the most important really part of this tool right now is the US markets page and what the current stage of the SPY is. So as we've talked about, SPY is currently in stage 3, and most US markets are all in stage 3 or in stage 4. So the US market is pretty bearish right now, and it's actually the healthiest market of all the major world markets, though, because if we go back and look at the if I sort by stage 2 here, if we look at the foreign markets, all the major foreign developed markets are in stage 4, and almost all emerging markets are in stage 4. So the market is very unhealthy right now. That's really the first thing you should do when you look at the stage analysis screener, is look at the overall health of the major world markets, with SPY being most important. We can also look at the breadth of the S&P 500. So right now, almost 50% of stocks in the S&P 500 are in stage 4, and almost 20% are in stage 3. So that's over almost 60%, or over 60% in stage 3 and 4. So again, very poor technical action in the S&P 500. The Nasdaq is kind of the same thing. So going forward, what we want to see for the market to improve its health is that you'll start to see more stocks move back into stage 1 and stage 2, and less stocks will be in stage 3 and stage 4. So that's one sign, is paying attention to the breadth, and seeing it either improve or weaken will be an indicator as to whether the market's getting healthier or moving into stage 4. We can also look at the health page, and this is kind of a summary of all the sectors that I have on the screener and whether they're strengthening or weakening. And I look at this page to kind of get a quick visual to see, if are more sectors in the market getting better, or are they losing ground. And again, the market is still weak, so we got more sectors weakening. If you look at the transitions page, you can take a look at how many stocks are moving into stage 1, 2, 3, and 4. So if we've got 268 stocks moving into stage 2 at the current time, but if you go to like stage 3, there's 287 stocks moving into stage 3 and 546 stocks moving into stage 4. So again, there's more stocks, moving into a worse stage than a better stage, which is another indication that the market's, still weakening here, or still not very healthy. So again, wrapping it all up, the stage analysis screener, really the most important thing you can do is help you understand the overall health of the market. And just by knowing that, I think it will improve your trading if you're using the stage analysis system.